Hey everybody, so in this video we're going to talk about the Federal Reserve and we're going to talk about charts. So I'm going to break this video into two parts. So obviously today was a big day. It only happens 4 times a year. So pretty much at the end of every quarter we get something called a Summary of Economic Projections, SEP for short. So what we get in this data release is pretty much some insight on what the Fed is actually thinking. So what they're thinking with GDP, unemployment, inflation, and interest rates. So this day is very, very important, and the data drops usually around 2 p.m. Eastern Standard Time on a Wednesday. So, you pretty much got everybody just twiddling their thumbs. They're setting their alarm clocks at 11:59 p.m. Eastern Standard Time. They're sitting on the edge of their chair, and people are pretty much planning their restroom breaks, sitting on the toilet, and pretty much seeing how stocks react to this news drop. So I want to show you first how you can be the first person to pretty much find this data. So it's very simple. You're going to go to federalreserve.gov. Once you're at this website, this is pretty much what it's going to look like. You want to hit this tab right here, News and Events. You want to click Press Release. Now you're going to see right here that there's 2 releases for today. And this one right here, it says Federal Reserve Board and Federal Open Market Committee release economic projections from the March 21st to 22nd FOMC meeting. This is what you want to click. Notice right here, it says monetary policy. So you want to go ahead and click on that. Now right here, there's a PDF. It says projections. This is what you want to click. Now, if I scroll down, you want to look at this chart right here. And then after you look at this chart, you want to go down to the dot plot. So essentially, when this data dropped, I was literally refreshing this page at 2 o'clock. So at 2 o'clock, I was refreshing that page, the press release page, waiting for that data to drop. I was literally clicking like this. And as soon as that information came out, I clicked on it. I was looking at this. I wasn't even looking at equities. Like, equities were the least of my concern. I wanted to analyze this data before even looking at how stocks reacted. So now I'm going to go ahead and show you my annotated notes. So let's go ahead and pull that up. Let me just zoom in for you guys here. Now this is the first thing that I like to look at, and I think it's the most important. So they give us this little table right here. And let me show you what this table shows you. So it shows you change in real GDP, unemployment rate, PCE inflation, core PCE inflation, and it shows you the Fed funds rate, which is arguably the most important part. Now they show you 2023, 2024, 2025. It's called a summary of economic projections because they're projecting out several years, and it shows longer run. So one other thing to notice, underneath these data points, they also show their prior projections from December. So what you want to do is you want to do a vertical analysis here. And you want to compare, what were they looking at in December versus now. So let's go ahead and do that. So the first thing that I like to look at is obviously the Fed funds rate. So as soon as I saw this for 2023, I saw, okay, 5.1 in December. All right, that's bullish. That's very bullish. But then I thought to myself, what is the bearish thing here? Well, the bearish thing is that the market participants were literally expecting rate cuts. They were expecting like almost 50 to 75 basis points of rate cuts by the end of this year. But with this report, that literally squashed those expectations. And, when Jerome Powell was talking, he mentioned several times that the Fed's objective is to get inflation down to their 2% target rate. So he mentioned that several times, not just once. And essentially when somebody asked him a question, they asked him, hey, if inflation comes in higher, would you still raise rates? He said yes. So, even though we have all of this crazy bank crisis situation, Jerome Powell, they'll probably look at these two things separately where, if banks are acting up, they'll do a quick fix while at the same time they're going to be monitoring inflation. And if inflation does come in higher, their credibility is at stake, and they likely will have to raise interest rates even higher to combat that inflation. So, that's pretty much the messaging that I got from this report. which is why I do think that we ended up selling off pretty hard at the end of the day, on top of already being overbought. So let's just go ahead and look more into this data. So the next point is 2024. Now note right here, the December projection was 4.1. They revised that to 4.3. So what does that mean? To me, I kind of perceive that as, hey, you know what? Maybe they think that inflation is going to be a little bit more sticky. So they're not actually planning to cut as fast as they were thinking about before. Because their worry is, hey, if we start cutting right here, is inflation going to prop back up? But obviously, if we go into a hard recession, they're not even going to care about this. They're going to go straight down to like 1 or 0% again. So we're going to go right back to ZERP if we do get a hard recession, hard landing. Now, take a look at 2025. Nothing changed there, 3.1. And longer run, nothing really changed there. They do want to take this down to 2.5. But like I said, if we do get a hard landing, yeah, that's going right out the window. We're going right back to ZERP. Now, if we're looking at core PCE inflation, here's a little bit of bearish news right there. In December, they were expecting this to be 3.5. Now they're expecting it to be 3.6. So a little bit more sticky. 2024, same situation. They were expecting it to be 2.5. Now they're expecting it to be 2.6. 2025, unchanged. What about PCE inflation that's not core? So 2023, 3.3 versus 3.1 in December projection. Now for 2024, unchanged. 2025, unchanged. What about employment rate? This right here is relatively flat. So for 2023, they were looking at 4.6 for December, and now they're expecting 4.5. So they're actually seeing that unemployment is going down a little bit. So maybe that means that, hey, the job market is a little bit stronger than they thought. So therefore, we might see stickier inflation here. Now, 2021, this is unchanged. 2025, this is expected to go up to 4.6 versus 4.5 in December. Now, what about change in real GDP? So this right here, December, they were projecting 0.5. Now they're downgrading that to 0.4. For 2024, here's the big one. December projection, they were expecting 1.6. Now they're expecting 1.2. So that is quite a drop right there. Now in 2025, they're expecting 1.5 in December, or 1.8 in December, excuse me. And now 1.9 is what they're expecting after this meeting. So now we're going to jump into the dot plot. So I'm going to zoom out a little bit so we can see all of this. Now, as you guys can see, these numbers right here, they were too small. So I kind of just plugged in my own numbers right here. And same with down here as well. So this first bracket, that's 2023, 2024, 2025. This is the most recent report, and we're comparing it to the December report right here. So the dot plot is essentially the way of the Fed governors and the bank presidents to pretty much vote where they want the Fed funds rate to be. So for 2023, you can see something very clear. If we're looking at this 5.5 area, you can see 3 dots right here. In 2023 right here, we only saw 2 dots. So now you can see 1 extra dot right here, and then 1 dot going all the way up to this 5.75 area. So that wasn't there before. So now you're starting to see more people expecting higher interest rates in 2023 because, inflation isn't going away as fast as they thought. Whereas before, you saw quite a unison right around here at 5%, where, the majority is still around there, but you are starting to see you are starting to see a little bit more spread up here. So it's something to pay attention to. Now in 2024, here's another piece of data right there. You can see that there's more people expecting above 5%. So for 2024 right here, you only saw this dot right there and that dot right there. So that dot is left unchanged right here. But right here, you can see 3 more dots right around that 5 to 5.25-ish area. So, that's clearly showing that, hey, there's more members in 2024 that are expecting that inflation is likely going to be sticky and they want to keep the rates here for a little while longer. So that's definitely some stuff to pay attention to. Now we're going to go ahead and we're going to jump into the charts. All right, so now onto the technicals. There's a lot of things that I want to pay attention to, but first things first, we want to look at the Fed funds futures spread. So, we're looking at ZQH23 versus the ZQZ 2023. So that is essentially just looking at the March versus the December Fed funds futures spread. And what we're looking at right now, we are essentially looking at a spread of around negative 0.4. So the Fed funds futures is still pretty much saying, hey, Powell, we don't really believe you. We're calling you out on your BS. And we're still expecting somewhere between 25 to 50 basis point rate cuts by the end of this year. So that is pretty much what the Fed funds futures is saying. So that could easily change with data drops, as we've seen in the past, or with more of this banking fear. So, when we did get that banking fear, we literally flipped from, expecting 1% of rate increases to all the way to negative. So right down here, we were literally expecting over 1% of rate cuts. So, this can be very volatile right now. So I don't necessarily think that this is all that trustworthy, just given the volatility here. So, we're going to keep an eye on this, and we're going to see what happens once this actually just consolidates for a little bit. Now, moving on, we're going to look at QQQ. So with QQQ, I have these anchored VWAPs, one from the all-time high and one from the more recent lows. So pay attention to where we actually rejected. We rejected very close to this. So this is right around 316.43. Intraday, let's see where we went intraday. So whoop, let's zoom in. Intraday, we went to around 315, what is that, like 315.20-ish. So, we were within like $1 and some change. Now, if we're looking at where this bottom anchored VWAP is, this is right around this 50-day moving average. So this kind of happens right around 295.52. So we could end up being in the sandwich right between 316.43 and 295.52. Keep in mind, we do have the 200-day moving average right below that. It is at 290. We do have the support trend line underneath that as well. But right now, the scenario is probably favoring this move right here, this VWAP sandwich right there between, like I said, 295.52 and 316.43. Do note that we did have this almost double top-like pattern, and we did make a second high right here, but you could still see this as a double top. So sometimes when we do go up here for the second test, we get a little bit higher than the previous high, but sometimes, you do see a fade right there. So this right here, it looks like some sort of a reversal candle to me. But obviously, we're on FOMC week. A lot could happen. Maybe we tread on higher, and today was just a bear trap. Now, oh yeah, one more thing. Let's look at RSI. I always do like to pay attention to RSI, see what's going on there. So let's go ahead and load that study set. So we're going to load the MACD RSI. Let's take a look at where RSI actually went. So let me just scroll up on this. And as we can see, RSI did get pretty high. It was right here at around 63 on QQQ, right around the high, or 63, 64-ish. So it did get pretty darn high. Now let's just zoom out a little bit. And you can see right here, all the way in February, this did make it all the way to 70 when we were up here. So, obviously RSI is still pretty high, but it wasn't as high as it was back then. Now, price action back then is very similar to where we are right now too. So something to pay attention to. Now, let's move on. We're looking at SPY. Now, SPY, this was the VWAP sandwich that I talked about in my last video. And let's just zoom out, or zoom in, and see how this played out. So obviously we have this downtrend line that's literally been defining the entire move for like the last 2-3 years. Now, actually maybe not that long. Let's see. Oh yeah, I lied. Pretty much for the last year and a half or so. Now, pay attention to this anchored VWAP right here. This is anchored to the all-time highs. So if we're looking at this, this is right around 407.69. And if we're looking at this anchored VWAP that's anchored to the lows, this is right around this moving average right here, the 200. So let's zoom in a little bit more so we can see that more clearly. So, it's right underneath that 200-day moving average. So 200-day moving average is at 392.53. As you can see today, we closed underneath that. So we were literally above the 50-day moving average, and in one fell swoop, we cut below that 50-day moving average and right below that 200-day moving average. So it literally knifed. So yeah, to me, this does look like a reversal candle right there. And maybe we could see some more selling off, or maybe we just bounce between this range even further. But do note, this is essentially where we went down to, this anchored VWAP to the bottom. We didn't really cut below that. So this is why you want to pay attention to anchored VWAPs. They're very, very useful tools. So that's essentially what's going on with SPY, but let's just kind of see what could happen if we do sell off a little bit more. Well, guess what? We have this trend line right here that's pretty much been defining resistance for the better half of a year. So, let's just say that we're to fall down right away. Well, this could take us all the way down to this consolidation zone right here, which can literally go all the way to like 374 to 387. So, we could fall quite a bit. But do note that this line is trending downwards. So as time moves on, if we do want to gravitate towards this trend line, we are going to fall lower. So something to think about. Now let's go ahead and look at Apple. So Apple is very interesting. In the last video, I did talk about the supply zone right here. And I did talk about the scenario where if we did break the supply zone, we could have a pretty strong run. We had that run. And we literally got as high as 162-ish. So notice that we almost made this top right here at around 164. So it's still very possible that we could make it back up here. But if we're just looking at this candle right here, this candle looks very bearish. So this candle right here does look like some form of a reversal candle. And do note that we got right back into the supply zone. So we're literally at the top of the supply zone. Maybe we could sell off again. And then maybe we go back to this support trend line right here, which is sloping upwards. So, if we were to just knife down right away, this could go down to like 153 maybe. And then if we were to cut underneath this, well, now we have this golden cross right here, and we have this 50 and 200-day moving average. So, we do have this moving average convergence. So if we were to fall underneath this trend line, we would have about 2 moving averages right around there that could act as support. So definitely something to pay attention to. Oh yeah, one more thing. Let's take a look at RSI. I do remember it was quite frothy. All right, MACD RSI. Take a look at that RSI right there. And you guys can see, yeah, it was pretty high. This literally got to about as high as 66 in this last run here, assuming that, this run is over. So, yeah, RSI definitely got a little bit frothy. Now, all the way back here, in February, this got all the way up to the high 70s. So this went up to like 74, 75-ish. So RSI isn't as high as we were in February, but it's still pretty darn high. All right, now what about Microsoft? So Microsoft, this anchored VWAP from the all-time high, this is playing out pretty damn well because look, 272.27. Where are we right now? 272.29. So it literally just pulled right back into there. So we went into this gap zone area, which did act as a supply zone. So let me zoom in on that. So we flew right into this gap zone. We didn't quite fill that gap. We were very, very close. So we didn't quite fill that gap. And we sold off. So this was literally just a honey trap. And bulls were thinking, oh, we're going to fill this. So, they're all getting their calls. And then, boom, taken down right there. But we're right back onto that VWAP. So we can't necessarily say, hey, you know what, this run is over. Now we're just going to crash. Because, we did fall on that VWAP. And we could still bounce from here. But if I'm just looking at this candle alone, that candle looks very, very nasty. That is a shooting star. So, this could signal a reversal. Maybe we go all the way down. And if we do go down, maybe we go down to this anchored VWAP, which is right around the 50-day, which is right around the 200-day. So we have this moving average sandwich right here, or this moving average convergence right there with that anchored VWAP. So this could literally fall all the way down to maybe like 252 to 254. So it does have a lot of downside. You do have to remember that in the last 4 trading days in the last week, this went up like 30 bucks. So this was a pretty extensive move, and this could just be a pullback of that move. So definitely something to pay attention to. Let's take a look at RSI as well. All right, so let's see how high this got. Okay, so more recently, this went all the way up to 70. So this definitely got up pretty high. And if we're looking at where we are right now, it's sitting around 61. So RSI did cool down a little bit. So let's go ahead. Let's look at the next ticker. So now we're looking at Meta. So this anchor VWAP from the all-time high, this is also playing out pretty damn well too. So, we are seeing price action just cut down a little bit. So right now we're at 199.81, and this VWAP right here is at 195.75. So maybe we could pull back down to that a little bit. So you do see that we did kind of print this shooting star-like candle. So maybe we just go right back to this VWAP. We see what happens here, okay? And then right below that, we do have this gap VWAP, which is right at around 183.78. And then below that, we have the 50-day moving average at 169.63 and the 200-day moving average at 149.78. Now let's kind of zoom out. Let's see what upside might look like. So if we're looking at upside, where are we right now? Well, upside could take us right back to here. So, that could be like a 224-ish, so 223, 224-ish. But, right now, this does look like it does at least want to retest this anchored VWAP right here at 195.75. So just wait and see what happens if it does come back there. Do we cut underneath that, or do we bounce right off that? That's something you want to pay attention to. And do also note that we do have this support trend line right here. So if we do fall underneath that and this anchored VWAP is lining up with that, maybe we see a bounce right there. And then, maybe we go up higher, or maybe we cut underneath. So that we don't really know yet. Now let's take a look at Google. So Google was definitely interesting because I know that the RSI was a little bit frothy. And if I do have this anchored VWAP from this move before we saw this massive sell-off, we pretty much hit that anchored VWAP. So that anchored VWAP is right at 105.35. Right now we're at 104.22. We did make it slightly above that, as you guys can see. And if I am looking at this anchored VWAP from this bottom right here, this is right around the 50-day moving average. So let's just kind of zoom in on the price action right here. So right here, we have the 200-day moving average. It's right around 102.22. We're still above that. This anchored VWAP, you can see that we got above it and we sold right back below it. So here you can kind of see why these are important, because in this last move as well, we got above the anchored VWAP only to fall right underneath it. And then you can kind of see that we knifed right below that 50 and that anchored VWAP, but we did eventually get right back above it. We got right back above this downward trend line right here. So when we got up right here, that was a false breakout because we got right back in it. But then we broke out again. So what happens if we get another false breakout? Well, then I think that this triangle structure is going to break. So this wedge structure that we have right here, let me zoom out so you can see it a little bit better. So it's defined by this support right here and this resistance right there. So Google is kind of tricky because it gives you several fake breakouts. Fake breakouts, that was kind of hard for me to say. So right here, you can see that we broke out right there, faded, broke out right here, faded, totally rejected right on there, broke out right here, faded. Are we going to do the same? Break out right here and then fade again? Because if we do, I think it's very, very likely that we could break underneath this trend line right here. So ultimately, we're going to see, do we get back above this anchored VWAP right here at 105.35? If not, then are we going to hold that 200-day moving average at 102.22? If we do get above this anchored VWAP right here, well, where is the next potential high? I would think it would be right around here at 108, 109-ish. So we will probably likely try to retest this. And let's see what this is. Is that a gap right there? Let's see. Let me try and zoom in right there. Yeah, maybe, I don't think we've filled this gap yet. So if we do fill that gap, that would be right around 110, 110.50. So that is also a possibility. Now, let's go ahead. Let's look at that RSI that I was talking about. Let me load that study set. All right, so here you guys can see the RSI. So very, very high. It literally got all the way up to like 70 basically. So yeah, in the past, in February, early February, we did get above these 70 levels. So, RSI definitely frothy right here. Is it going to pull back? Possibly, because it did that last time as well. So, last time we were at around 72-ish RSI, and then we literally pulled all the way back to 38. So are we going to do that again? Possibly. So we'll kind of see how that plays out. Let's look at NVDA. So NVDA is also very, very interesting. Now, I've pretty much saying this about everything because everything is very, very interesting. So NVIDIA, its current price action is defined by this massive, massive rising wedge right here. So let's go ahead and zoom in on that price action right around that rising wedge. And what do you know? We broke out of it only to fade all the way back to the top of this rising wedge. So again, this does look like a reversal type candle. We'll see if we see further selling. If we do see further selling, we will likely find support right around here, which is the bottom trend line. But obviously at any point in time, if we do break down below this, I do think we will see some consolidation, and then maybe we could see a move down. So NVIDIA, it's still very, very frothy, but it continues to defy logic. It literally just goes higher and higher and higher. Everybody keeps shorting it and shorting it and shorting it. And then it's just saying, screw your puts, calls only. So we'll see if this is finally the reversal that we're looking for to finally cut through this rising wedge. So yeah, obviously, if we cut through this rising wedge, it would not be a good situation. We do have this 50-day moving average right around 215.78. Below that, the 200-day moving average is all the way down here at 169.46. So we are well above the 200-day moving average. All right, so moving on, we're looking at the VIX. VIX is a big old nothing burger. At least that's what it looks like. But when you zoom in, you can see that we did go into this demand zone right here. And you can see that this is a demand zone because in the past, we went all the way down here. We rallied hard. We went all the way down here again. We rallied hard. All the way down here, rallied a little bit, small rally. And then came down here, consolidated a little bit, and then massive rally right there. So what did we do right here? Well, essentially the same thing. So we got down, but we didn't really go deep into this demand zone. We just touched the top of it. And we have this pretty strong hammer candle right here. So we'll kind of see how this plays out. I'm not too sure what's going to go on with the VIX. It's been pretty crazy lately, but it also would not surprise me if we just went deeper down and we retested this trend line all the way down here. Let me zoom out a little bit more so you guys can see that. So it would not surprise me if we went back and we hit this right here. That would not surprise me at all. All right, finally, DXY. So DXY, right here, there is this demand zone right there. So this demand zone, the bottom of this is right around 101.40. Right now, we're at around 102.54. So I also would not be surprised if we fell a little bit more to the bottom of this demand zone and then we got a pick-me-up candle. So, right now, it fell off quite a bit today. So yeah, as you guys can see, we have this doji candle. It's a little bit of indecision right here. So hope you guys enjoyed this video and have a good one.